Okay, dear students, today I intend to cover the income tax portion of agricultural income and its tax treatment. So, in the initial classes, we discussed about exempted incomes, and at that point of time, we briefly discussed that agricultural income is exempt from tax. So, I also mentioned that there are a few things we need to understand with respect to taxability of agricultural income. We call it as a scheme of taxation. So, per se, agricultural income is exempt from tax, but there is an interesting scheme of taxation and there are various other aspects regarding taxability of agricultural income, rather non-taxability of agricultural income. First of all, we need to know what is an agricultural income. Okay, we all in general know what is an agricultural income. An income derived from agricultural activity. So agricultural activity is sowing seeds, cutting the plant and all that. So there are many things you do to call it as an agricultural activity. So if you're going to derive an income from an agricultural activity, it is completely exempt from tax, no doubt about that. There is no change in that provision. But there are a few interesting aspects regarding that. Now, before going into what is agricultural income, we need to know the basis for understanding. Yes, how do you distinguish an agricultural income and a non-agricultural income? To give you a simple example, in fact, there was a case law about this particular aspect of what is agricultural income, what is not agricultural income. There was a nursery. The nursery is a place where you grow saplings and plants and sell. Okay, there was a nursery. But I think it's a Chennai-based case only, where in the nursery they were selling saplings and growing seeds, selling saplings and small trees and all that. I mean, small plants and all that. And they were making some activities around that nature, and they were making some profits. The question came to the court was regarding whether this activity constitutes agricultural activity. You actually are sort of selling the plants and saplings and all that, but whether that activity is included in the nature of agricultural activity was a basic question. So whether at all it's exempt from tax was a basic question. So the court concluded that yes, it is indeed an agricultural income. And the act itself, the definition of agricultural income under the Income Tax Act was amended to include this activity of carrying out nursery activity where you grow plants and saplings and all that, and that is exempted from tax. So the basic question that keeps coming time and again is what is agricultural activity, what is not agricultural activity. That is one aspect of it because it's fully exempt from tax. So a department will have a close look on whether it is at all an agricultural income. From your perspective, you may call it as an agricultural income, but department should also fit it into the definition of an agricultural income and decide whether at all it's an agricultural income or not. Okay, so the definition of agricultural income, what constitutes agricultural activity, what does not come into the agricultural activity one. Secondly, we are going to discuss about there are certain types of activities where there's a combination of agricultural and non-agricultural activity. For example, let us say you have a coffee estate or a tea estate, and you're growing coffee or tea, and you're the basic process of plucking the coffee or tea, then processing it, then grinding it, making it a powder, and you actually sell it as a tea powder or a coffee powder. So the entire range of activities you do in your factory, you have a plantation, which is a coffee or tea plantation. You actually carry out an agricultural activity there, no doubt about that. But later, you actually take out that product and then process it and convert it into a marketable product in the form of a tea powder or a coffee powder. So the issue is here, whether at all it's fully an agricultural activity, the answer is no. It's partly agricultural, partly non-agricultural. So consequently, we need to understand the taxation of how do you treat with such combination activities where it's partly agricultural and partly non-agricultural. Very interesting point in agricultural income. So it's an entire chain of value chain, what we call, right from the time of an agricultural activity to produce a product until the time you sell the product. The third aspect is regarding there is a scheme of taxation with respect to agricultural income, very important scheme. Now, interestingly, yes, it is exempted from tax, no doubt about that, agricultural income, but the exemption is not given directly. For example, let us say Mr. X has got, let us say, 3 lakhs of agricultural income and 5 lakhs of other income. 3 lakhs of agricultural income and 5 lakhs of other income. Other income means something like other sources. So it's got a total income of 8 lakh rupees. Now, under the scheme of taxation, first we need to determine the tax as if agricultural income is taxable. Carefully understand, very important point. First, we need to determine the tax as if the agricultural income is taxable. What does it mean? So, agricultural income 3 lakhs, non-agricultural income 5 lakhs, gross total income 8 lakhs, less deductions 1 lakh, 7 lakhs, tax on above. Okay, this is what you need to do as step 1. Step 2, as an individual, he's got a basic exemption limit of 2 lakh 50 plus agricultural income which is exempted from tax 3 lakh rupees. So you have to take tax on that 5 lakh 50, determine tax on that 5 lakh 50. Very important, I'll repeat. Step 1, what you should do is determine tax as if agricultural income is taxable in the normal course. So for time being, assume that agricultural income is taxable. So 3 lakhs agricultural income, 5 lakhs of non-agricultural income, 8 lakhs is taxable. Determine tax on that after deductions. 7 lakhs is, I told 1 lakh is deduction, 7 lakhs is a net income. On that you determine tax. Let us say tax is, for easy understanding, 75,000. Step 2, what you should do is, being an individual based on his age, the basic exemption limit can be 2 lakh 50 or 3 lakhs. So take the basic exemption limit of 2 lakh 50 or 3 lakhs. To that, add the agricultural income, which is what I discussed about 3 lakhs. So let us say, for example, his basic exemption limit is 3 lakhs and 3 lakhs is agricultural income. For 6 lakhs minus deductions, you derive the tax, and the difference in tax is what he should pay. Are you able to understand? So in the first part, what we have done, we have included agricultural income as if it is taxable. And the second part, we have taken the basic exemption limit and agricultural income, we have added it and determined the tax on that. And then the difference between the two is what you have to pay. So here, the basic taxation aspect is, instead of directly exempting the agricultural income, they are considering it for determination of the tax slabs. Very interesting. We call it as agricultural income is included for the limited purpose of determining the slab rates. So, yes, there is indeed going to be an additional tax obligation on the part of the assessee in this mechanism, but that is how the Act is intending to do. Instead of directly exempting the agricultural income, they want to do it this way. So, anyway, it is exempted indirectly, but they are trying to do it in a different way. Are you able to follow what I am saying? So, this is another important scheme of taxation with respect to agricultural income, where instead of directly exempting the agricultural income, they are adding it to the total income, determine the tax, then go to the exemption limit and also the agriculture. So, if, for example, if you have only agricultural income, no, so the question of taxation will not arise. Why? Anyway, step 1, agricultural income is 3 lakhs, deductions if any, no need to go for deductions because total agricultural income, there is no other activity, no other income. Then step 2 also is going to give you the same thing. So, there is no tax on it. So, straight away, you are exempted from tax. So, if you want to only carry agricultural activity and no other activity, particularly, I'll come to the details of that, no other income for you, then it is completely exempt from tax. So, no need to go into this scheme of taxation for agricultural income and all that. Clear? So, very, very simple aspects regarding taxation of agricultural income. Now, let us understand the definition of agricultural income under the Income Tax Act. Section 2, subsection 1 capital A defines agricultural income as any rent or revenue derived from land which is situated in India and is used for agricultural purposes. So, there are 2-3 key words here. Any rent or revenue, both are in the nature of income only. Okay, rent or any form of revenue derived from land. So, in agricultural activity, there are a lot of things which you may be aware where you can actually rent it out or lease it out and you still derive income out of that. Okay, you may not carry on the agricultural activity, or you may rent it out, or somebody else may carry on an agricultural activity on your behalf and they will give you the income in the form of produce or cash. So, any rent or revenue derived from land, the question is about the land only, which is situated in India. Basic question is, it is in India. Carefully understand. In exams, they ask you land is situated in Bangladesh, land is situated in Singapore. Then you will start thinking whether at all it is agricultural income. No, it is in India, and is used for, the land is used for agricultural purpose. Very, very important point. The land should be used for agricultural purpose. Then only it is exempt from tax. Then only it comes under the definition of agricultural income. Secondly, any income derived from such land by agricultural operations, including process of agricultural produce raised or received as a rent in kind. Many times you get rent in kind in agricultural operations. Even today, probably it is prevalent that you don't get the revenue or rent in cash. You may get in kind. So, any income you derive from land by agricultural operations, including processing of the agricultural produce raised or received as rent in kind, so as to render it fit for the market or for sale of such produce. So, you get something like rent in kind, you process it or do something about it and then sell it in the market. Because sometimes, or many times rather, your agricultural produce cannot be sold as it is. So, you have to process it, you may have to carry on some activities on that and then sell it in the market. In that case also, it is categorized as agricultural income. No problem on that. It is exempt from tax. Then income attributable to a farmhouse subject to certain conditions. Yes, this is an interesting point. Income attributable to a farmhouse. A farmhouse is not, we need to understand what it is. A farmhouse is something which is used for the purpose of agricultural activity, which is adjacent to the farm land. We are not talking about a farmhouse where we go for a weekend relaxation and go and spend a couple of days. I have a farmhouse in, not me, somebody may say, I have a farmhouse in somewhere in OMR or ECR where I have 1 acre of land. I have grown a lot of trees there. I go and I have a small house there, a guest house. I go and stay there, relax over the weekend. That is not a farmhouse. Let us be very clear. Okay. Interestingly, there are many cases. You have a farmhouse in far off from a city place, but you give it for cinema shooting, then also it's not agricultural income. So the fundamental principle of agricultural income is something very, very important. What is agricultural income? What is not agricultural? So here they are referring to any income derived from or attributable to a farmhouse subject to certain conditions. That farmhouse should be used for agricultural purposes. Then it is exempt from tax. You are letting it out for agricultural purposes. Then it is exempt from tax. Any income derived. Then the fourth point what is coming up here is discussing about the saplings and nursery activities, which is the amended definition. Any income attributable or derived from saplings or seedlings grown in a nursery shall be deemed to be agricultural. Very interesting. They've said it is deemed. They are not still saying it is agricultural. If they say it's deemed, okay, I'll assume it's so. Because the court have said that. I don't know, still they are probably trying to conclusively say it is indeed an agricultural income. Because even if you grow nursery, saplings, a plant and all that, you have to do some activity, You have to put manure, you have to put a seed, you have to water it. All this come under agricultural activity. But interestingly here, the nursery does it more on like a trading activity, like selling plants and all that. So there was a question about that. So that has been settled now. The definition itself is now deeming it as an income, which is called an agricultural income. So hence it is exempt from tax. So safely you can conclude it is exempt from tax. Coming to the rent or revenue should be derived from land. As I said, the land should be in India, and the land is one which is not in a foreign country. And if it is in a foreign country, this condition is not satisfied, so exemption will not be available. And the land is only used for agricultural purposes. And I also told you about the basic operations of agricultural activity should be carried on. Whatever agricultural activity, the labor and skill should be deployed in agricultural activity, then only you can call it as agricultural income. Otherwise, it is not an agricultural income. That is why letting out your farmhouse for a cinema shooting doesn't come under the category of agricultural income. Clear? And agricultural operation is something important which you should carry out. Otherwise, it is not an agricultural income. There are a few examples where we can look at what is agricultural income, what is not agricultural income, and that is basically based on certain case laws where the courts have decided these activities do constitute agricultural income, these activities do not constitute agricultural income. Then when we talk of farm building, farmhouse, as I said, bona fide annual value of a house property is normally taxable. However, income from house property, which is in the nature of a farmhouse, you remember this? In house property also we saw that there is no tax for income from a farmhouse, and that is not also included under agricultural income. But the conditions are very, very simple. The building, the farmhouse, should be occupied by the landlord only for agricultural activity, for agricultural purposes, and should be occupied by the cultivator as a landlord or as a tenant. Because in agricultural activity, the tenancy is quite common. You can give it on a rental basis. Somebody can carry out agricultural activity. So that should be used for agricultural activity. It should be in the immediate vicinity of the land where your agricultural activity is carried out. Immediate means it should be closer by. You cannot have a land in Chengalpet and have a farmhouse in Chennai. Correct? So very obvious. So I don't think this needs any explanation. It's very obvious that it should be closer to the agricultural land. Then the land is basically for the purpose of the farmhouse is primarily used for agricultural activity, and hence it is exempt, and then only it will be exempted from tax, not for any other purpose like letting it out, as I said, for a cinema shooting or etc. Clear? Now there are a few examples of what is agricultural income, what is not agricultural income. I'll give you some examples here. Profit on sale of a standing crop or produce after harvest by cultivating by the owner or the tenant. It's an agricultural income and hence exempt from tax. It's very, very natural activity in the form of an agricultural income that is exempt from tax. Rent of an agricultural land received from subtenants. Yes, as I said, as long as the activity is agriculture, whether you do it or your tenant does it, it is exempt from tax. It is still coming under the definition of agricultural income. Then income from growing flowers and creepers. Very interesting. Growing flowers and creepers. Okay, I don't know why this doubt came into anybody's mind, but they thought there is some issue whether it all is agricultural activity. Yes, it is indeed agricultural income. Then very interestingly, salary received by a partner in a firm for rendering services to a firm which is engaged in agricultural operation is agricultural income, as payment of salary is only a mode of adjustment of the firm's income, and it may be noted that the share of profit from such firm is not taken as agricultural income, as such share is anyway exempted from the income tax. So salary received by a partner for rendering services to a firm which is engaged in agricultural operation is agricultural income, as payment of salary is only a mode of adjustment of profit of the firm, and it's already exempted from tax also. Share of profit is anyway exempt, and here also it is exempt. Interest on capital received by a partner from the firm engaged in agricultural operation is exempt from tax. That is, it's not taxable. It is still coming under the definition of agricultural income. Very important point. Income of a partner in the form of interest on capital, where a firm is engaged in agricultural operations, is exempt from tax. And we discussed about the nursery. That is also agricultural income exempt from tax. Non-agricultural income. Examples: income from sale of wild grass and reeds of spontaneous growth. Very interesting. You have a huge land, and in this there is a spontaneous growth of some grass. Grass grows everywhere, and you cut it and you sell it and you make some money out of it. Is it an agricultural activity? No, the answer is no. Because you are not carried out any agricultural operations. Agricultural operations involve sowing a seed, watering it, putting a manure, cleaning up, pruning, all. There are so many things you can bring it under the definition of an agricultural activity. Since it is not coming under the agricultural activity, it's taxable. It's not an agricultural income. Income of sale of agricultural produce received by way of price for water supplied to land. It is not an agricultural income. By supplying water to land for agricultural operation also, it is not treated as agricultural income. Income from fisheries. Actually, I don't know why they brought in fisheries here. Fisheries has got nothing to do with agriculture. I don't know. So anything ending with culture, they think it's agriculture. No, there is a lot of other cultures also. No, you have aquaculture. What is I am referring to here? Aquaculture is growing fish and prawns and all that. No, it's called aquaculture probably. So they are trying to define whether it's agricultural income. The answer is no. It's not an agricultural income. It is taxable. Royalty income of mines is taxable. It's not an agricultural income. Income from poultry farming. I don't know where from this poultry farming came into picture. Income from they use the word farming. So farming means agriculture. Correct. Our people are quite good in interpreting, and they interpret English in a very nice way. That they keep on debating it. Okay, I am doing farming activity. I am doing poultry farming. Poultry farming, you know what it is? You grow this small chicks and grow it into and eggs they lay, and you sell all that. They are trying to include it under agricultural income. Super. Okay, but the decision is very clear. It's not an agricultural income. So income from butter and cheese making. Butter and cheese making. What is the relationship between butter and cheese making and agriculture? I don't understand at least. But it has been an issue, and court have decided it's not agricultural income. See, there are a lot of such things which goes to the court, where the court has to decide. Not only court, various authorities. When I'm just reference purpose, I'm using it as a court because justice is done in court. So I'm using the word court. But the issues are dealt with at various levels. Appellate authorities are there. That is all in a final level, so that is something different. Okay, so these are all the aspects you need to keep in mind while deciding whether it's an agricultural income or a non-agricultural income. Coming to the partly agricultural and partly non-agricultural, as I said, it's a combination of activities, which is like a tea or coffee estate. I told you. Let us understand that a little more. It is covered under Rule 7, 7A, 7B, and 8. Many times I ask questions in this. So if at all you are getting questions, it's going to be easy for you to score marks in this. Growing and manufacturing tea in India. If you are going to be engaged in the activity of growing and manufacturing tea, tea means need not be processed and all. Without that, carefully understand. If you are a person holding a plantation and you are growing and maybe manufacturing tea, you have a small plant there. Many times people do that. And non-agricultural income is 40%, agricultural income is 60%. This is the split given under Rule 8. So you need not think about it. So if you are growing and manufacturing tea in India and you receive 10 lakh rupees as your total income, profit, what I mean to say, out of that 40% is non-agricultural income and 60% is agricultural income. Coming to sale of centrifuged latex rubber or Senex or latex-based crepes such as pale latex crepe, or these are all terms used in rubber, or brown crepes such as estate brown crepe, remilled crepe, smoke blanket creep, or flat bar creep, or technically specified block rubbers manufactured or processed from field latex or coagulum obtained from rubber plants grown by the seller in India. So to put it in a nutshell, all rubber plantation regarding activities. 35% is non-agricultural, 65% is agricultural income. Rule 7A, capital A. Then sale of coffee grown and cured by seller. Grown and cured, that's all. Not beyond that. Coffee grown, plant, pluck coffee seeds, cure it and sell it. 25% non-agricultural, 75% agricultural. That is Rule 7B1. Sale of coffee grown, cured, roasted and grounded by seller in India with or without mixing chicory or other flavoring ingredients. So he is going to the next level. He is growing, curing, roasting and grounding, making it into powder, and with or without mixing chicory or any other agent. 40% is non-agriculture, 60% is agricultural activity under Rule 7B18. So these are all fixed percentages, we cannot change it. We have to apply this percentages in determining income of some assessee, whoever it is, who is drawing income from these activities. Okay. In any other case, very, very important. Now, other than this, Rule 7. So you can go cashew also, no? Cashew is not brought out here. Look at this very interesting example. Like this, there are multiple examples you can think of: cashew or mango, anything. It's all agricultural income only, no doubt. But they are not coming under the rules. You have to do it in a different way. Sugarcane is the best example. I'm going to go through an example on that. Sugarcane. In sugarcane, what happens? You grow sugarcane, you process it into sugar and sell it as a sugar. It's partly agricultural, partly non-agricultural. So Rule 7 applies here. For disintegrating or bifurcating a composite business which is partly agricultural and partly non-agricultural, the market value of the agricultural produce raised by the assessee, market value of the produce raised by the assessee or received by the assessee as a rent in kind and utilized as a raw material in his business is deducted. Very, very simple. Now let us say I am growing sugarcane. I am processing sugarcane, making it into sugar. I am selling sugar for 10 lakh rupees in a year. Selling sugar, processed sugar. Now 10 lakh rupees is my sales revenue and the expenses is for me the market value of the sugarcane which I am using it for making sugar. The market value of the sugarcane which I have produced on my own in my own field, let us say 5 lakh rupees. The value at which I can sell my sugarcane, that is market value, right? As such, without processing it. So my market value of sugarcane produced is 5 lakh rupees. So 10 lakhs is my sales revenue from sugar minus 5 lakhs is my expenses, which is my market value of sugarcane used in making sugar minus any other expenses, whatever I may incur. That gives my profit from this activity. On that only I have to pay tax. That automatically means my agricultural income is deducted. The value of the sugarcane, which is removed from my income. 10 lakhs is my revenue from sale of sugar. I remove 5 lakhs, which is value of market value of sugarcane used in making sugar. I reduce all my expenses to make sugar. Then I get my business profit. That is what is taxed. I think it's very logical to do it. That's how it's done for any other, be cashew or mango. Mango you process and make mango pulp or mango juice, or you can do many things. You can even do mango pickle. You have a mango farm, raw mango, cut it and make it into pickle. Sell it as a pickle, bottle pickle. Same principle will apply. The market value of the mangoes which is used in making this pickle, the market value of the mangoes fruit which is used in making the juices, or cashew. You can process cashew and make salted cashew and sell in packs. You can process cashew and make it masala cashew and sell it in packs. Everything is partially agricultural, partially non-agricultural, and you know this rule is what is going to be applicable for every case. Okay, are you able to understand? So no further deduction is permissible for cultivation of this particular. So only the market value is directly taken into consideration. You need to have a basis for the market value because that is something which has to be carefully done. Otherwise there will be issues on that. Clear? Now coming to the example of sugarcane, what I gave you, X-Limited grows a sugarcane to manufacture sugar, and the data for the year 1920 is given below. Cost of cultivation of sugar, rupees in lakhs, 4 lakhs. 4 rather. Market value of sugarcane when the sugarcane is transferred to the factory, 9. Other manufacturing cost, 6. Income determination will be as sales turnover of sugar, selling of sugar, 22 lakhs. 22. So how will you determine income? Sale value of sugar is 22 lakhs less manufacturing expenses, which is part of the cost of manufacturing sugar. It's a business expenditure, less 6 lakhs less market value of raw sugar cane, 9 lakhs. So if you reduce all that, you get 7 lakhs from manufacturing activity. Agricultural income which is turnover of sugar cane, 9 lakhs, market value of sugar cane, which is reduced as an expense, less cultivation expenses for making that 4 lakhs, 5 lakhs. Anyway, that is exempted from tax. Carefully understand. We are talking about agricultural income is exempt from tax, non-agricultural income is taxable, correct? So in sugarcane business, you are deriving it into two parts. Income from agriculture, which is cultivation of sugar, and market value of sugar is 9 lakhs, less expenses to cultivate sugar is 4 lakhs. So 5 lakhs is agricultural income, not taxable. That is one side of the story. The second side of the part of the aspect here is my business income from growing sugarcane and processing into sugar. So I have 22 lakhs worth of turnover of sugar, less my manufacturing expenses for sugar 6 lakhs, less market value of my sugar cane used is 9 lakhs. So my business income from sugar is 7 lakhs. Are you able to understand this? Very, very simple. Similarly, there is one more example. X is engaged in the business of growing and manufacturing tea in India, and the data available is as follows. Sales of tea 45 lakhs, expenses of growing tea leaves 20 lakhs, manufacturing expenses for tea, processing of tea 15 lakhs, then you get a profit 10 lakhs. Out of this 10 lakhs, 60% is of 10 lakhs is agricultural income, that is 6 lakhs, and 40% is non-agricultural income. Are you able to understand? Clear? So whatever is covered in the separate rules, the breakup is already given, 60-40, whatever, 45 or 35-65, whatever they have given. In the same basis, you have to split the income into agricultural and non-agricultural income after you derive your profits, not at the sales level, at your profit level. Okay, so tea is a very good example, and this split is very, very important. But other than tea, coffee, rubber, because that is what we have seen here. Other than that, anything else, I gave you examples about sugarcane, I gave you examples about mango, I gave you examples about cashews, anything you can imagine, whichever falls under agricultural activity, the split is done on this earlier basis what I discussed. Hope you have understood. Now coming to the last part of this lesson, how do you split agricultural and non-agricultural income? The scheme of taxation, what I said. So there are few conditions to be fulfilled to apply the scheme of taxation, where I said first add the agricultural income with non-agricultural income, find out the tax. Then step 2, you find out the tax for agricultural income and exempted income put together. What is the tax? The difference in this is what you should pay as a tax, correct? That's a scheme of taxation with respect to agri income and non-agri income. Somebody who's got both agricultural income. For example, I have both agricultural income and non-agricultural income. I should apply this scheme. Clear? The conditions are: 1, the taxpayer is an individual or a HUF or a body of individuals or an AOP or an artificial juridical person like a company also. Secondly, the taxpayer has non-agricultural income exceeding 5,000 or exceeding the exemption limit rather. Otherwise, this scheme will not work, as I already told you. My non-agricultural income should exceed, see, for me, the basic exemption limit is 2,50,000. Correct? My non-agricultural income, I am doing something, it should exceed 2,50,000. Then only this scheme will apply. Otherwise, the scheme will not apply because the entire agricultural income is anyway exempt. So, if my exemption is 2,50,000, let us say I have got from other sources only 2,00,000 rupees, which is below the exemption limit, then I need not apply the scheme. The entire thing is exempted. Agricultural income is also exempt. Other income also is not taxable because it is below the taxable limits, the slab what we are talking about. The second condition, third condition is the agricultural income of the taxpayer should exceed 5,000. Then only the scheme of taxation apply. If my agricultural income is 2,000 rupees, this scheme will not work. Or I will not include this at all. I will not apply the scheme at all. It's completely exempt from tax. So if you fulfill all the three conditions, the scheme of taxation will apply. What are the steps involved? Step 1, net agricultural income is to be derived. First of all, net agricultural income. What does it mean? My agricultural income after all expenses, as if it is chargeable to tax for time being. Step 2, agricultural and non-agricultural income of the assessee will be added, aggregated, and income tax will be calculated as if such is the total income. Income tax will be calculated after deductions only, naturally. Step 3, so agricultural and non-agricultural income will be calculated, and after deductions you will get tax. That has to be determined. Step 3, the net agricultural income and the amount of the basic exemption limit will be added, and tax will be determined on that. Are you able to understand? And that is to be determined separately after all your deductions, etc. Then step 4, the amount of income tax determined in step 2 will be deducted from the amount of income tax under step 3, the difference. And step 5, find out the balance, add surcharge, add health and education cess, and final is the amount of tax payable by the assessee. Very simple. First step I told, determine the agricultural income. That is okay. And to put it in simple, there are only 3 steps basically. Agricultural income and non-agricultural income you add, less deductions, net income, tax on that. Then basic exemption limit for you as an individual 2,50,000. Let us say you are an individual 2,50,000. Add net agricultural income, less deductions, tax on that. Difference in the tax is what you should pay. As simple as that. So the point I am repeating here is this is included for the purpose of determining tax slab rates only. Though indirectly this eventually leads to agricultural income not taxable at all. That is well understood. But for the limited purpose of determination of tax, they have brought in this new scheme of taxation for agricultural income, which is what is something make this interesting. Very simple steps involved. So kindly go through this and let me know whatever doubts you might have in your mind. And as I said, typically, if at all, there is a topic here which is something relevant for you. But from exam point of view, how important it is, in my view, if this is going to come in exam, definitely any examiner is normally tempted to ask a question on agricultural income. That has been the trend over the years. So you can very well be prepared on this. It's easy to understand and apply also. Typically 3 to 5 marks could be the weightage for this topic on agricultural income. You can easily score that. There are 1 or 2 examples given which I think it's very simple, direct. You can understand it by going into the book. I have explained it in detail. Hope you have understood it. And please go through that and let me know whatever doubts you may have. I'll catch up with you in the next session very soon. Take care.